Hey everybody, we finally made it. Sorry we had some little bit of audio trouble, but everybody should be fine now. So welcome to Webinar Wednesdays. Today we're going to be talking about a topic that is so important to everything we do as a real estate investor and everything you do as an entrepreneur. I'm very happy that today we're going to have our guest host is going to be Patricia Bauer, our loan officer at Everyday Funding, so that you can get more familiar with her, and Mike Mulholland, who works here as well, and he's going to be co-hosting with her. All right, so I'm Melissa Jeanette Shea, president of the Long Island RIA, as well as Everyday Funding. So I hope you truly enjoyed today's message. It's really got some great points to help you improve your score very quickly. And if you're watching this on a recording, you can play it back so that you can master these skills in credit reports and credit scores. So without further ado, Patricia Bauer.
Hello, everybody, and welcome to Webinar Wednesday. I'm joined today by Michael Mulholland, and we're here to talk to you about credit reports and credit scores. Your credit score is so important to everything that you do, from applying for mortgages to car loans. Even utility companies and prospective employers actually look at your credit report. Happened to me many years ago. Back in '94, I had previously owned a business and went out of business, had to file for bankruptcy. So try to go back to work, and lo and behold, they asked me, is there anything going to show up on your credit report that we should know about? And I'm thinking, oh, no, I've never been arrested. I've never committed any crimes. And they're going, anything else? And I said, oh, well, I did have a bankruptcy. Oh, you're going to want to write a letter of explanation about that, which I did. I told them this was all because of a business, going out of business, and they turned me down for the job. That was pretty humiliating. So I did learn that you really have to pay attention to what is on your credit report, and that's what we're here today to show you things that you can do to help improve your score. So, Michael, how are you today?
Me couldn't be better, but I'm just out of curiosity. What do you think the average credit score is today?
Well, as of today, the average credit score, and this is across the board, is 740.
Wow.
Pretty high.
Yeah, I'd say.
10 years ago, the score was only 680.
That's amazing. So I guess people are getting much better at credit.
Absolutely. You know, people like me have now learned that your credit is important to everything that you do. So increasing your credit score, being aware of what your credit score is, monitoring your credit are all very important things, especially for entrepreneurs today.
So so credit reports, are those run by the government?
No, they are not. And that's a misconception by a lot of people. This is not run by the government. There's mainly three big players out there, credit reporting agencies. Although there are hundreds of them, I'll let you know that right now. But the big players are TransUnion, Equifax, and Experian. They're the three that everybody is going to pull when you're applying for mortgages and car loans and things like that. So what is on your credit report? Well, of course, it's going to have your name, address, your social security number, your date of birth, and most likely your employment information. It'll also have things on there, your existing credit, your car loans, your credit cards, student loans, mortgages. They're all out there. They're all reporting on a monthly basis. They report to the credit bureaus. They actually get paid for that. So they're making money on your credit report. It'll also have public record information. If you have any judgments and liens, bankruptcies, and collection accounts. So those are things you need to really pay attention to and make sure if it is on your report, you have to be aware of how long these things stay on your report. So it could be 7 to 10 years that these things can be affecting your credit report. Late payments as well will affect your report. typically for only 2 years. After they're looking at the last 24 months worth of payment history as far as credit cards go.
So a credit score of 680, I see, that's considered a pretty good score.
Yes, 680 is a good score, and you can definitely get your mortgages at that score. Some companies are starting to go down a little lower. They understand that Fair Isaac is not that fair. So, but 680 and you're good. Anything over that is good credit.
So if you get a better than 680, do you get better credit?
Absolutely. You'll get better interest rates, which is the biggest thing for you. How much are you paying out in interest on those car loans? If you have poor credit, you're going to be looking at paying like 9% on an auto loan, where somebody with good credit will be paying more like 4 or 5% on that same loan.
Wow. I guess people make these mistakes, huh?
Yeah, and there are other things that affect your credit report, like inquiries. So if you're going out there and you're applying to all different credit cards and mortgage companies, every time somebody does a hard pull on your credit report, that's going to bring you down a couple of points. So you want to try to limit the amount of credit inquiries. Ask them when you're going for these loans, is this going to be a soft pull or is it going to be a hard pull? Because a soft pull will not affect your credit, where a hard pull will. So that's something that you should always ask when you're applying for credit.
Yep, I see the big five mistakes: living beyond their means. Yep, co-signing for a loan. Oh, come on, mom or dad, sign for the car loan or the student loan, right? Not budgeting, making minimum payments. Why is that important? So if I pay my credit cards on time, what's the big deal?
They actually pay attention to how much you're paying.
That's, I guess, utilization rate, right?
Right. Well, your utilization is how much you have outstanding. So just for simple math, if you have a credit card with a $10,000 available balance, if you use more than 25 or 30% of that, so $2,500 or $3,000, it will actually have a negative impact on your credit score.
So if I have a $10,000 card and I use 5,000 of it, it'll have a negative impact?
Absolutely. That's 50% utilization.
And if I make minimum payments, they're going to hold that against me too?
Yes, they're looking to see how much you pay on a monthly basis, and the more, if you pay over that, then they figure, oh, he's living within his means, he can make more than the minimum.
And I see closing old accounts and opening new ones. I would have thought that was a good thing.
Actually, it's not. Even if you do not use a credit card, do not close that line. One thing that affects it is the length of credit history. So if you're closing out your old accounts and opening new ones, all they see are the new accounts because the old accounts are closed, which will, again, have a negative impact on your credit.
Wow. So what are the credit bureaus?
Well, as we went over, you have TransUnion, Equifax, and Experian are your three big players. There are Vanguard and other scores out there, but that's not the score that's going to be pulled when you're looking to get a mortgage, even an investment property.
I see. And these guys make money by selling your information.
Yes, they do.
So that means when you get those cards in the mail that say, you've been approved for $1 million for a new credit card, that's basically the credit bureau selling that information.
Right. If you turn over those offers that you so often get in the mail, it'll actually say on the back, this is not an offer to extend credit. We do not provide the credit for you. They're basically brokers. And they purchased your information, and they're looking to get you to apply so that they could get somebody else to give you that line of credit.
Yeah, and I see you say, why is bad information so valuable?
Well, they want to know the bad information so that they know how much credit that they should extend to you, if at all. It's for their protection, not for yours.
Wow.
So lenders will use your credit report to decide whether you can get a loan and the terms that you're going to get for that loan. Biggest thing being the interest rate. Well, whether or not they're going to approve you, of course, but your score will affect the interest rate that you're going to pay. Insurance companies will look at this information to decide whether you can get insurance. And again, that'll be based on what rate you can get. Car loans too. Like we discussed, employers also look at your credit report, and you can potentially be turned down for a job if you have some negative information on there. Telephone companies and utilities use this information to decide whether to provide you service. They can actually ask you for a cash deposit before they'll even turn your utilities on if you don't have good credit.
Wow.
And of course, landlords, if you're looking to rent, they're going to look at your credit report as well and decide whether they're going to take you as a tenant or someone else.
Okay. And I guess all this information is collected by the big three.
Correct. Your creditors, whether it's a charge card or an auto loan or mortgage, they're the ones that report to the credit agencies, and that's how they make money off of you.
And does it matter what kind of credit card? So if I have 3 credit cards: Wells Fargo, Bank of New York, and Citibank. Is that good enough?
It's good to have a minimum of 3 different credit cards that have a history of at least 24 months. But it's also very good to have a variety of credit. So credit cards are good. Have at least 3 of them. Keep them active, even if you're not using them. Every once in a while, buy yourself lunch, pay it off just to keep that card active. Don't let them close it out because you're not using it. But the variety, so having auto loans, mortgages, student loans, not just one type of credit, having a variety of credit on your report is important.
Okay. And the information, so if I were to look at all 3, I'd see the same thing, right?
Absolutely not. Very funny, but each of the bureaus collects their own information and determine their own score. If you look at all 3 of your bureaus right now, your TransUnion, your Equifax, and Experian, I can guarantee you the 3 bureaus will have 3 different numbers, all in the same range, but they will never all have the exact same number because it depends upon the information that they're collecting and they're processing.
Wow. So, if I want to see what do I do?
Well, we always advise that people monitor their credit. You can get your annual credit report. You get your credit report once a year for free at www.annualcreditreport.com. You can also call 877-322-8228 to get your annual credit report. Review your report. Make sure the information on it is correct. Your name, if you have a middle initial, your address, your social security number, and your date of birth. There are many people out there with the same names, so information can be mixed up within the credit bureau, and you can actually find somebody else's good or bad credit showing up on your report. So it's very important that you monitor your reports and make sure the information is accurate. If it is not accurate, you need to dispute that information or have it changed. If it's just maybe your address, they could have the wrong house number or something on there, but call them up and make sure that they make those changes.
Okay, so fixing any errors, even the small ones, is really important, huh?
Absolutely, because they could be looking at somebody else's information and not yours. The information can actually be merged. 2 different people can have information showing up as if it was the one person and it's really not theirs. There are other Pat Bauers out there in the world.
Right, and that one could be out there spending your hard-earned money or ruining your credit.
Absolutely. So just pay attention to what's on your report.
So who else is allowed to see this?
So they can, credit bureaus can provide credit reports only to lenders that you are seeking credit. So if you apply for a mortgage or an auto loan or a credit card, they're the only ones who are allowed to request your credit, and they have to have your permission to do that. Lenders that have granted you credit, they can check your credit report annually, and they can adjust your credit limit based on what they see on your report at this point in time.
Oh, is that why sometimes my credit card companies either increase my limit or decrease my limit?
Yes, exactly. So they're going to check your credit report annually, and they'll decide, even if you've been paying them on time, if they think your utilization is too high, even with no late payments, they could decide to lower your available credit, which of course is going to affect your FICO score, because now the lower available credit that you have, the higher utilization you're going to have. So you can call, as long as you're making your payments on time all the time, you can call every six months to a year and ask for a credit limit increase. Even if you're not going to use it, having a higher available amount of credit is going to reduce your utilization. So that's a good little trick.
And I see that, the insurance companies can do it, government agencies, I guess all those things have the impact on whether you pay higher premiums or not.
Yes, they do.
Amazing, huh?
So generally, negative credit information stays on your report for 7 years.
Wow.
Yeah.
7 years.
Yeah, and if you file personal bankruptcy, that stays on your report for 10 years. Criminal convictions can stay on your report indefinitely, but late payments will generally only impact your report for 2 years. And let's just go into a little more detail on a late payment. If a payment was due on, let's just say, the 10th of the month, and you didn't get around to paying it for whatever reason until the 20th of the month, yes, you're going to have to pay a late fee, but that will not show up on your credit report. They do not report until your payment is 30 days past due. So pay attention to your due dates. If for some reason you can't make a payment on a card, make sure you get that payment made before it's actually 30 days past due. If it's only 10 or 15 or 20, you will pay that late fee, but it will not impact your credit report. So that's very important to know.
So would you advise to have minimum payments being put on so that on the 10th of the month, the credit you're paying the $25 or $30 automatically, so you'll never have to worry about being late?
That's a very good trick too. If you could just set your credit cards on automatic payments for the minimum amount due on the due dates, that is going to make sure that your payments are always made. You don't have to think about it. Another thing that you can do, which may help some people out there, is you can actually call your credit companies and ask to change your due date. So you could set all your credit cards to be due on the 15th of the month, and or the 30th of the month, or half and half, whatever works for you, so that you know that you'll have the money in the bank to make those payments. And at the end of the month, if you have extra money that you want to put towards one of those cards, you can just simply go online and make an additional payment.
So we've talked a lot about these, ups and downs, but how do they calculate your credit score?
Well, there are a few factors that go into your credit report score. Of course, whether or not you pay your bills on time, so late payments, and your available credit, how much of it you're using, so that's what we call the utilization. The age of your accounts. How long has this account been open? So if you have an account open for 10 years, that's much better than the accounts that you just opened up a year ago. So even if you're not, again, using those cards anymore, don't let them close out. Keep those cards open. Every once in a while, use them so that they don't discontinue your card for lack of use.
Okay. So we've heard all about this, but what happens if I don't know what my credit score is? I should basically apply by calling that number earlier. But if I find out my credit is 660, what should I do?
Well, the first thing you should do is try to pay down your balances to less than 30% of the credit limit on each of your cards. Make sure all your payments are on time. We discussed setting up automatic payments. That helps, that you don't have to, oh my God, today's the 10th, it was due on the 9th. So just making that minimum payment, and if you can make additional later, go right ahead. Don't take on additional credit or have your credit pulled. Again, those pulls, if it's a hard pull, ask that question. Is this going to be a hard pull on my credit report? Hard pulls will bring down your FICO score. Those are called inquiries on your report. If there's telling you that it's going to be a soft pull, then you can go ahead and do that. That will not affect your report. And if you have a credit score of less than 620, we can help. We work with a couple of different companies that are credit repair companies. We could pull your credit ourselves and just discuss with you your utilization and the information that's on that report and give you some tips and tricks on how you may be able to bring that score up.
As a matter of fact, I think we're going to do that on today's broadcast, right?
That would be great.
Yeah, so one thing I've discovered is you got to take control of your finance, and that means credit monitoring.
Right. And there are different scores out there, like we had already discussed. There's the FICO score versus the Vantage score. So everybody has probably heard of a company called Credit Karma. They use the Vantage score. So it's not your true FICO score. I'm not saying not to use it. It's a soft pull on your report, and it'll give you a general idea of what your score is, but be aware that it is not your actual FICO score. So when you go to apply for credit, the score can be a little higher or lower.
But the real trick is to use, what, creditchecktotal.com?
Yes, I recommend people go to Credit Check Total. It's actually creditchecktotal.com. They charge you $1, so you do have to put in your credit card information, and you have access to all 3 bureaus, a tri-merged credit report. Download your report. You have 7 days to cancel that account with Total Credit Check. Otherwise, they will start charging you monthly service fees. So if you want to continue because there may be some negative information on there, or you need to monitor your credit, then go right ahead. But you only have 7 days at that $1 fee. And then you could cancel it and you're done. You've already downloaded your report. And
oh, I see. So if I were to call them today, I pay them $1, I get it, and next week I cancel because I found out, oh, my credit's $800 and I don't need them, and then I just cancel it, and I paid $1 to get all my reports.
Right, and the important thing is you're getting a tri-merged report. You're getting your Experian, your Equifax, and your TransUnion, because those are the 3 big players that everybody's looking at.
And Credit Karma only gives you 2, I understand.
Right, and yeah, that's the Vantage. So it's not your true FICO.
Okay. So how do you calculate this?
Yeah, how do they come up with that FICO score? Yeah, Fair Isaac. Love it. Well, your payment history is the most important factor. It's 35% of your score. And then your utilization, as we discussed. Your utilization accounts for 30% of your score, and that's easy to remember since you don't want to go over 30% of your utilization.
And I see types of credit. That's what you talked about. You have a mortgage, a Macy's credit card, a couple of bank cards, and an auto loan. That's a good mix.
Right. They want to see that you have a variety of credit. So if you have a couple of credit cards out there and you don't have any loans, mortgages, you may want to think about maybe getting a small unsecured loan and pay off those credit cards. Now you have a variety of types of credit, and your FICO score will actually go up because you've paid off your credit cards.
That's great.
And of course, the length of your credit history, we've already discussed. Don't close out those cards that you've had for 10 years just because you're not using it anymore. Keep the account open, keep it active, because the length of credit is 10% of your score. And as we discussed, credit inquiries, new credit inquiries. So if you're out there shopping around for a mortgage and loans, those inquiries will again account for 10% of your score.
Yeah, I know that you had talked to me about one of the clients had just on the border, she had a good mortgage, and then suddenly when they went to close, they checked her credit again, and her credit score had dropped dramatically, and that was because I think she bought a new car.
Yeah, that's one thing that we don't like to see when you're applying for a mortgage. Don't apply for any other credit until you've already closed on your mortgage, because they will pull your credit again just prior to closing for that exact reason, to see that nothing has changed. If you go out and buy a car, that auto loan is now showing up on your report. Number one, it will bring down your FICO score. And number two, you may not qualify for the loan anymore because of that additional monthly payment.
Wow. So, what can you do to fix this?
So we have our little ninja tricks. One thing that you can do is, if you know somebody who has very good credit, you can ask them to put you on as an authorized user on their credit card. They're not going to give you the credit card. It's going to come in the mail and they're going to shred it. But their good credit will now show up on your credit report, as well as the available credit. So again, now you'll have more available credit. Your utilization will go down. Another thing not many people have heard of is rental karma. So if you do not own a home and you are currently renting, you can ask your landlord to report to rental karma. And of course, report that you're paying your rent on time every month. And that will have, again, a positive effect on your FICO score. Personal loan, like we had discussed before, take out a small unsecured personal loan to pay off your credit cards. Now you'll have a variety.
So you could give me a personal loan to pay off my credit cards.
Absolutely. You know, you can get it from a friend, a family member, a business partner. It doesn't have to come from a bank. But getting it from the bank is better, because that's going to show up on your credit report.
Right.
And then you'll have a variety of credit. Dispute any negative items on your credit report. That seems to be pretty obvious. And business credit cards. Now, you can get business lines of credit that do not report to your personal line of credit, unless you don't make those payments. Of course, bad information will filter through to your personal report. But we have ways of getting business lines of credit. It's under the business name. It does not appear on your personal credit report. And you can give us a call here at Everyday Funding, and we can suggest a couple of companies to you.
Well, Patricia, I certainly learned a lot today. Credit's critical, especially in getting a mortgage, because that's the only thing that's a variable. So if they appraise the house, the appraisal is very good, but you don't have good credit, you can get turned down for the loan or pay a higher interest rate.
Yeah, absolutely. So if you would like some more information, feel free to call us here at Everyday Funding Services. Our number is 631-343-8700. We can help you get pre-qualified for a loan. If you're in contract on a loan, you can call us to discuss the specifics on that loan. We're happy to just talk to you, give you information. We can help you complete a loan application, or we'd love to see you at our next event. We have Long Island RIA the second Tuesday of every month at the Huntington Hilton. So come, we would love to just meet with you and chat.
Okay. Thanks, Patricia.
Well, thank you so much for joining us here at Webinar Wednesdays, and we look forward to meeting with you. Thanks.